Good afternoon. Welcome to the weekly livestock market update. I am Brownfield anchor reporter Megan Grevner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, today we've had a busy day. We're going to talk monthly trade data. We're going to talk retail prices, consumer sentiment, and round out with today's Friday supply and demand numbers. So to kick things off, let's recap what happened this week in the markets.
You have to look at the cash side on cattle this week. We were stronger. Fed cattle up about nearly $1 on the week this week. Those feeder cattle markets were also stronger. They were anywhere from $1 to $5 higher this week. On the future side, October live cattle futures contract was down $1.85, and the September feeder cattle contract was down $2.20. On the beef side, choice box beef price down about 60 cents. That still puts it $38 above where it was a year ago. But when you look at live cattle prices being up $44, probably makes the world a little bit tougher on the packer side of the equation. On the hog side, cash barrels and gilts down nearly $2 this week. Lean hog futures for October were also down nearly $1.80. And the pork cutout value also lost this week, down $2.76. Much of that was on what was a retreat in belly prices after a couple of strong weeks.
Are we starting to see maybe a little pullback in pork demand just because as we're heading into the end of summer grilling season, some of that seasonality factor in there as well?
Yeah, I was going to say we should expect some potentially lower prices due to seasonality as we look ahead. And just as maybe I would have said back in late spring, we might have been too low on prices. Maybe we've unfortunately gotten a little too strong, and we'll see some continued downward pressure in the weeks ahead.
Correcting ourselves back to more of an average for this time of year?
Average for this time of year, not that producers are going to like the answer to that, but yes, perhaps we'll move lower as we look ahead.
All right, let's take a look at slaughter numbers. Kind of an interesting week as you look at cattle slaughter specifically and hog slaughter as well.
Yeah, for sure. So you look at the cattle side, according to USDA for the week ending August 12th, the run of 603,000 head of cattle this week. That's 10,000 less than what we ran a week ago and 42,000 less than what we ran a year ago. On the hog side, a run this week of 2.354 million head of hogs this week. That's 16,000 head above where we were a week ago and 26,000 head above a year ago.
How are we running comparison year to date for cattle and hog slaughter both?
Yeah, this week we didn't change on the pork side, so 1.3% above a year ago when we look at the year to date numbers. But on the beef side with a smaller run, this week, we're down 4% in cattle slaughter year to date.
Scott, as we get into these reports, we're going to kick off with monthly trade data. As we take a look at June numbers, I think it's really interesting to see what pork exports are doing in comparison to where they were a year ago. And on the flip side of that, what's going on with beef exports as well? Yes,
so we'll start on the positive side and talk about pork exports for June. Pork exports were 9.5% above year ago levels. You look across the board here, the only place we were down was to South Korea. South Korea down 9.6%. But when you look at the positive side here, Mexico up 11, Japan up 4.2, China, Hong Kong, Taiwan up 24%. And I'll keep saying, it's the all of the countries. It was up 12.3% for June. When you look at the first 6 months of the year, pork exports up 9.6%, pretty strong in terms of all those destinations when you look at year to date. On the beef side, beef exports for June were down 14.2%, and at the same time, beef imports up 9.1% for June relative to a year ago. Down to places like Japan, South Korea, China. Mexico is higher in terms of exports there for June. Year to date, beef exports down 11.4%. And again, Japan, South Korea, China, all lower. Mexico is the only place we saw some higher year to date beef exports.
I want to talk about the import side of that number. You brought that up. I get asked all the time, why are we importing beef? We have such high quality beef here in the US. Why can't we just use it? Is there's a rhyme to that. There's reason to that, right?
Yeah, yes. Although we don't want to always hear that, I'll say, so number one, beef imports here to date up 0.8%. So what's been happening is we've been getting stronger the last couple of months. To me, price has something to do with that. We keep running higher prices, and I think that opens the door more for imports of beef from some places. Yes, we're going to talk about importing more of a lean product into the United States, and that might blend nicely with some fat we have left over here in the U.S. side.
It's that whole hamburger. We're a nation that loves hamburgers, and we have a lot of fat cattle, right?
That's right. We all want that nice tasting burger, and that usually comes with some added fat to the lean that we might bring in from other places.
When we look at the exports and what's going on trade wise, are we concerned about where trade is running in the US, specifically ag trade overall?
So maybe a little bit. So I'll say in the case of beef here, I'll just keep saying we're running record prices. I am not surprised exports slow when we're talking about those kinds of prices. So I think we're going to continue to have some struggle as we look ahead on the beef export side, just because I don't see a lot of retreat in terms of where beef prices are for a while. But I expect those markets could grow for us if we ever get to the point where we're talking about growing beef supplies.
Retail price, we're going to talk about prices. Let's talk retail prices. As we take a look at what's going on the retail side of things, definitely seeing some increases in some parts of the grocery store.
Yeah, that's right. We have to look at the beef counter to talk about some of those increases. The choice beef retail price for July, $8.31 a pound. That is 17 cents above the June level. It's 9.1% above where we were a year ago. There's both boneless sirloin steak prices up 34 cents relative to a month ago. 100% ground beef up 7 cents. So in both cases, we're seeing higher beef product prices as well. On the pork retail side, pork retail price was $4.70 for July. That's up 2 cents from where it was in June. It's actually down nearly 5% from where it was July of 2022. Boneless pork chops were down a nickel this month relative to June, while sliced bacon was up a penny relative to where it was in June. But bacon prices down $1.18 for July of this year relative to July of 2022. That's a 16% decline.
And we're also, when we talk about retail prices, these are not considering any of those loss leaders or any of those discounted things that we might see on special at the grocery store as well, right?
That's my understanding of how BLS keeps that data, and that's the data that you and I are talking about today.
Consumer sentiment, I think, as we're going to talk about higher retail prices, we have to talk about what's going on in the consumer sentiment side of things. How are those August numbers looking in comparison to where they were a month ago, and even how we looked in 2022?
Yeah, if we look at the overall index, and again, I always like to remind us it's current conditions and consumer expectations. So this month, the overall index was down 0.6% relative to where it was in July. Year over year, it's still 22.3% higher. All right. So what's happening when you look at the August data, the index of expectations was down 1.5%. The current economic conditions up 1%. So one can read, hey, the current situation is better. And when you look at the year over year current conditions, that's 32% higher, Megan, than where we were a year ago. So I think all in all, although the overall index being down 0.6% might be seen as negative, when you look at where we've been over the last year, I still say we've got pretty positive consumer sentiment going.
It sure seems like we're crawling back at least a little bit at a time to recover and continue the recovery from where we were a year ago.
And if that continues, I think that spells good news for meat demand, by the way.
Let's hope so, even with higher prices.
Even with higher prices, perhaps it spells some good news for us.
Supply and demand numbers came out from USDA this afternoon. We're going to talk about this from two sides of things. First of all, I think we talk about the meat side of things, but then we also have to talk about the input and risk management component of that as well. Let's start with what USDA is doing with cattle price projections.
Yeah, so they keep raising cattle price projections, which is not surprising, just given how strong these markets have been. USDA raised their 2023 estimate here in August, 8 months in, and I don't make fun of them when I say that. It's just how strong these markets have been. They've raised that 2023 annual estimate $3.20 this month to a 178.50 for an annual average. They also raised then 2024 cattle prices to $1.86, up $2 from where they were last month. Those are the big increases, although they did raise barrel and gut prices as well. 2023 increased $4.30, reflecting, I think, what's been some stronger prices we've seen the last month or so. On the other side, chicken prices, USDA lowered 2023 $6.20, lowered turkey prices $11.30 for 2023, and they also then lowered those 2024 estimates as well for chicken and turkey.
When we look at some of the plant closures that we've been hearing about this week, some sow facilities in Missouri, some poultry facilities as well in Missouri and Indiana, is that more of an adjusting, or is there economics involved in that? And what's the concern about what that does to production moving forward?
Yeah, so it's really good question. So number one, I'll say, you look at broiler returns, as rough as USDA keeps them today. When you look at July of 23 relative to July of 22, July of 23 is about 60% of where they were in July of 22. Lower chicken prices, especially at the wholesale level, and feed costs that continue to be high have certainly made margins extremely difficult. I think that has something to do with some of the announcements that we see this week. I think labor in those processing plants continue to have to be an issue as well. And you're going to find, I think, this idea of we need to cut costs, just given how tight returns are. I think, similarly for the announcements we saw on the pork side of the equation, we're looking to gain efficiency, and those those farm closures, I think help on that efficiency side of the equation. This is no different than when we tell producers that in tight financial times, you work on minimizing costs. I think we're seeing the same thing in the announcements out this week.
As you look at the production, the price part of USDA supply and demand numbers, any other thoughts as you look at production as well?
Yeah, so I think the big one that I see, at least, USDA did raise beef production for 2024 this month by about 500 million pounds. Now, I want to be careful. That sounds more negative than I think it is. Their projection this month for beef production for 2024 is for 25.2 billion pounds of beef to be produced. They're predicting this year 27 billion pounds of beef produced. So we're still talking about a 2024 production estimate that's 6.7% below what they're estimating 2023 production. So they're just have brought up 2024 production. I think that's a good move given what we see in terms of numbers. They did also lower slightly chicken production at about 350 million pounds in August for 2024 relative to where they were in July. I think economics are at play there.
Let's talk the input side of things. Corn, soybean numbers, USDA today, obviously some drought impact, but also not taking into consideration this recent weather shift we've seen. I would assume is going to be more impactful for soybean yields and production long term for this year. What are some things producers need to think about in terms of that price and what that sets them up for 2024?
Yes. So I guess I looked at corn and soybean yields and said USDA didn't throw us any curveballs today with those yield estimates. Some will disagree with me depending on where they are, because some would have expected, I'm sure, lower yields from USDA and others higher. But in terms of feed costs, USDA did raise their 2023-24 corn price by 10 cents and raised soybean meal prices by $5 a ton relative to where they were last month. That still leaves them meal prices down 16.5% this coming year relative to a year ago, and corn prices down nearly 26%. Having said that, is there risk left here? Absolutely. We're not, we don't have crops in the bin yet. I think we could potentially see soybeans get better here, just given some of the rains we've seen in some parts of the country. But we'll have to wait and see. Let's not let an opportunity for cheaper feed costs pass us by to maybe lay off some of that risk. And likewise, let's not let higher cattle prices slip by with the opportunity to relatively inexpensively use products like LRP to reduce the downside risk in cattle prices.
That's it. That is what we have for the week. Anything else you want to throw at us?
I think, Megan, that's a full week for us this week.
It's definitely a robust conversation. As we look ahead to next week, cattle on feed numbers, what are you watching for in this latest round of reports from USDA?
Yeah, so we've had a couple of months of placements that have been above previous year numbers. I'm curious whether we break that trend of the last couple of months and start talking about lower placements. And I think a lot of that just has to do with dry weather and what's been maybe a move for a period of time of calves in the feed yards sooner than would be the case, which to me might suggest at some point we'll be back on the other side and talk about lower placements relative to previous year again.
Plenty for us to talk about next week, in addition to cattle on feed, continuing to watch the drought monitor and what's going on there. It sounds like there's some grass regrowth and some optimism in your part of the world, a little bit of an improvement. So we can talk about that as well.
Yeah, that's right. I don't want to say we're out of the woods, but at least we've seen some more precipitation and more hope as we think about fall pasture growth.
Scott, great to see you. We'll check in with you next Friday.
Sounds good, Megan.
To have our weekly livestock market update delivered your email box every Saturday morning, go to brownfield.agnews.com. You can also submit questions and comments there. And for market updates every day, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grevner for Brownfield.